This real estate hack made me 6 figures. Hey y'all, my name is Rishi and I'm 25 years old. I dropped out of college and I wanted to share exactly the process that I took to become financially free. So hit that subscribe and hit that bell button and let's get right into the video. In this video, I want to talk about this real estate hack that made me 6 figures, and I want to cover step by step what exactly you could be doing to get into real estate if you're a beginner. First of all, let's talk about some of the types of real estate investments you could be doing if you're a beginner. Number one, you could start off with doing wholesaling, meaning you can buy the properties from an auction and sell it to the flipper. That's something called wholesaling. Number two, you can do fix and flip, meaning you could acquire those properties from the wholesaler at a cheaper rate and make it look appealing, increase the value of the property, flip it into the market. That is exactly what I started off with, and you can acquire the property from the wholesaler at a cheaper rate, remodel the property, make it look good from outside and inside, and increase the value of the property, and actually go ahead and list that property into the market for retail buyers. Number three, this is one of my favorite type of investment, which is tax lien and tax deed investment, where essentially you are investing in a property where the homeowner hasn't paid tax for a certain amount of time, and what the county does is it takes the home, puts it on the lien. People like you and me who are investors, if the homeowner fails to pay the taxes, then you essentially become the next homeowner on that property. It takes really low investment value to get maximum amount of returns. That is one of my favorite type of investment, and I'm gonna definitely talk about tax lien and tax deed investment in the next couple of videos. And the fourth type of investment is if you have more access to capital, you could invest in development such as commercial estates or residentials and make condominiums and apartments and rent it out to consumers, and you can just collect passive income rent every month. Another type of investment is Airbnb arbitrage, which is also one of my favorite investment, where you can rent a property in a really nice area where it's a type of place where there is more visitors, having a contract to do a business on that property, because it is very important to let the homeowners know that you are going to conduct business on their property. One of the two things is going to happen: either they are going to charge more rent, or you have to sign a contract for a profit share on that property. You can work out in a million ways with the homeowner, potentially use their property to do business and make money through Airbnb. So that is one of my other favorite investments that you could start off if you don't have a lot of money at your access to begin with in real estate. Imagine having 4 properties making $10,000 a month each, doing rental and Airbnb arbitrage. Would that make a difference in your life? That is the question you should ask and proceed further if you would like to tap into real estate. Now let's talk about some of the opportunities in real estate that worked out for me. One of them is the fix and flip projects that I do with my partner. Essentially, we acquire the property in the first time homeowners market. We like to tap into the emotional market just so that we can move faster and quicker into that market. We do all the rehab. We essentially have our own contractors and move at a very faster rate. That is one of my investments that takes a little bit of time to generate the cash, but once we have the cash, we essentially invest that into rental arbitrage or Airbnb arbitrage, or funnel that into a rental property. So that is one of my strategies that I use. If you are a beginner at real estate and if you don't know where to start, then first of all, you need to have certain things in mind to be able to tap into real estate. Number one, you need to have access to money. Some people invest their own personal money. They have saved up from their hard-earned cash. They put a down payment on a property. I think that's a slow way to approach real estate. If you're someone like me who likes to tap into real estate at an early age, then I use something called OPM, which is other people's money, that allows me to have access to the capital whenever I need and tap into real estate without having to spend anything from your pocket. With that being said, if you want to know more about OPM, feel free to message me. Also, let me know if you need me to make more videos on OPM. OPM is one of the reasons why I have been able to acquire a lot of money and invest in a lot of opportunities. Second thing you want is having a proper optimized business structure, because real estate can be very risky if you don't approach it right way. If you don't know how to protect your asset, because there is tenant laws. If you have a property on rent, then if something happens, then how are you able to protect your asset? How are you able to protect your employees or the contractors that is working for you? Having a proper system and strategies in place along with a proper business structure is also very important in real estate. Let's talk about some of the do's and don'ts in real estate. Some of the things that I do recommend that you do if you're tapping into real estate is make a strategic plan. Don't just go approach real estate like a newbie. Make sure you have some knowledge. Make sure you have done all your math before you actually go ahead and invest in any property. Number 2, track your numbers. Meaning that if you are looking to invest in a property, let's look at some market research. Let's do some market research. What are the comps in that area? Fair market value of the property. Let's look at what others are offering for that property. Let's look at what the MLS listing is proposing about that property. MLS is listing that is on certain sites like Zillow, Redfin, also doing all the repair costs, what are the fees, what are the potential insurance costs, what is the wholesaling cost. So having all the numbers in place is very important before you actually make a decision. You do not make a decision and then calculate the numbers. You calculate the numbers and then make a decision always. Always track your credit score because your personal credit is the foundation of winning real estate. You need to have a flawless credit to be able to win in this game and not get overheads like high rate of interest. And number 3, mind your own business. Meaning you as a driver of the vehicle or driver of this entire project need to mind your business properly, allocate work exactly to the right individuals, let them play their own strengths. If you have a contracting company, then you need to make sure that that company is having a full accountability for the deadlines and the timelines that you want to work along with. That's just one example. Number 4, be financially prepared, meaning real estate is not a easy access game in terms of finance. You need to have access to a lot of capital in order for you to prepare for the uncertainties, meaning if the roof is not good and if the roof has leaks, you need to be prepared for the uncertainties. Another thing that you should keep in mind is if the project goes beyond the timeline, then you need to also make sure or keep in mind that there is finance fees, there is mortgage fees, there is holding fees, then you need to have in calculation before you actually take on a project. Number 5, always track your cash on cash return on your investment. Once the project is ready, let's calculate how much money we put in and how much money we are able to get out of this project, because at the end of the day you are working for a profit and not loss. So the way you do this is by dividing the net selling price by the investment or the money you put into the project. That will give you the cash on cash return on your investment. It is very important that you always keep a track on an annual basis to make sure how much, what's the progress and what's the trajectory you were shooting for and what exactly you are at right now. Very important. Okay, let's talk about some of the don'ts of real estate. Don't tap into real estate if you don't have much knowledge. Do your own research first. Make sure you get a hang of this, or make sure you partner with someone before you actually get into real estate by yourself. That's what exactly I did, and I was able to learn the process by being under someone. Second don'ts is do not take more money than you actually require. And the third thing is do not sell the property at a loss. Do not ever sell a property for a loss, because you have worked so hard now to acquire a property, work on that property. If the market is not favorable, then you should at least hold the property until the market recovers. So do not ever sell your investment at a loss. Do not buy a property at a retail value, meaning do not ever pay for whatever they are asking for, because you want to make sure that you have enough spread on the property to make a profit and also give an advantage to the buyer at a discounted rate. Always make sure that you give a little bit of discount to your buyer, but at the same time you also get enough discount when you acquire the property. That will help you in the future and build a really good relation with the buyers in long run. All right guys, I hope this video was helpful. If you have more questions about real estate, feel free to reach out to me on Instagram or Facebook or Messenger. Would love to help you guys out and tap into real estate. We also have fix and flip projects that if you guys are looking to tap into real estate, we have proper structures and proper deadlines. We also can give access to funding as well at 0%. If you enjoyed this video, please give it a thumbs up. If you guys want to see more content about real estate, funding, and passive income opportunities, then stay tuned for the next video.